All right, team. Good morning, good morning, good morning. How is everyone doing? Let me see. Sultan, what's up, what's up? Malcolm, morning, good morning. Of course, a lot of people from South Africa. Of course, every time. Good morning, Hope. Or good morning. I don't think it's morning for Hope, but happy to see you. Happy to see you. Good morning, good afternoon. Whatever it may be in your current time zone, of course. We have a lot of people from all over the world. What's up, Phil? How you doing? I'm doing great. Thank you. Thank you for asking. How are you? How are you? Let's learn something from today. I hope so. I hope so. Greetings from Switzerland, Thomas. Oh, yeah. Always, Switzerland, such a beautiful country. Buenos dias, Esteban. Buenos dias. How is everyone doing? Perennial Legacy. That's an insane name. I like that. What's up, Alexander? I'm doing great. Thank you. How are you? How are you? Good morning, good morning. Please do some fair value tutorial. Oy. I took one trade this week and was a break even. Not really high probability price action this week. Did you take any trades, Arjo? No, I did not take any trades. And for that exact reason as well. Not super high probability in my opinion. As in, just not what I wanted to see. If I get myself a pet cat, I will name him/her fair value gap. I like that one. I'm going to remember that. I hope you stick to it. Your channel's golden. Please let it stay hidden with the least subscribers. Oof. Well, there's already quite a lot of people here, I do have to say. It's quite difficult. What is the topic now? The topic today is mainly Sunday weekly forecast. And after we can go over some questions as well. I won't waste too much of your time. I'm mainly going over the Sunday weekly forecast today. Morocco, of course. Nigeria, always love to see it. What's up, Gift Edward? What's up? How are you doing, sir? How are you doing? My car's plate number is FEG. I like that one. Good morning, Dimas. Good morning. Hola, Pablo. How are you, sir? How are you? Oy, what a week it's been. I'm not sure how about everyone else. The week for me was quite slow, trading-wise, I do have to be honest. Because the dollar just simply didn't do what I wanted it to do. For the indices, it was quite nice. Indices was quite interesting. Other than that, for EU, AU, it was like more, not that interesting. Big love out of Antwerp from your Dutch-speaking fella. Love that, young Octo. Love that, my man. Beautiful city, Antwerp. Love that. Amsterdam here. Hi, Matthijs. How are you doing? Lovely Amsterdam, of course. Argentina champion of the world. Don't remind me, brother. Don't remind me. No. Love it. Let me see. Hey, Don, what's up? Don with the £5. That is crazy. Thank you for that, man. Thank you. Again, not needed, of course, but much appreciated. Thank you. Do you include interest rates, bond triad, SMT, divergences, and COD data in your analysis? Also for Vagab's false victory guaranteed. Big up, love that. I have done so in the past where I included interest rates, bond triad, SMT, divergences, and the COD data. Now, I'll tell you why I don't use it anymore. And the reason I don't do that anymore is because from what I noticed, I just got more confused than it did me any good. So when I went into the chart for the week, I expected certain things. And then because I also focused on the interest rates, bond triad, the COD data, mainly that COD data and the open interest as well, where if I focus on that, it's going to be too much for me. And from what I noticed, always the technicals just simply play out like they showed. So that is why I don't use them anymore personally. If that makes sense. What's up, Manny? What's up from Eindhoven? Seeing a new trade week? Yeah, absolute. And looking forward to the new trading week. Absolutely lovely. We're killing it this weekend, of course. Where everyone is sleeping currently, or well, depending on the time zone, of course. Where everyone got drunk last night. Or maybe you got drunk as well. At least we're working right now, right? We're doing something productive. We're already ahead of our competition. So with that being said, let's also dive straight into the weekly forecast, like I mentioned, without wasting too much of your time. Let's do it. So on the dollar, I have a very interesting thought process right now that we do have to keep in mind, which is quite important. We still have, of course, the monthly value gap, which is sitting above right there. Now, based on the breakaway gap, and this is something we're going to touch on next week, actually, because I saw, don't get me wrong, I see the comments, right? I saw quite a lot of comments as well where was being said, well, even in the previous breakaway gap video, where it stated, all right, but this was also a breakaway gap. Why do we trade into this? This is also a breakaway gap. Why do we trade into this? First of all, it's understanding probabilities, right? Whenever I teach a concept, it's never 100%. It's just a general probability, what is higher probability to happen over the other thing. This is what I want you to understand. I don't want you to feed into a shiny object syndrome, which just simply doesn't exist. There's no such thing as 100%. Other than that, we already know a high probability that if it's a breakaway gap, we are likely not going to trade into it before we reach a draw on liquidity. In this case, this low. Doesn't mean we can't trade into this at all, of course. So how do we know that? Well, that is why we go into the lower time frame, because that's also why in the previous video I mentioned the lower time frame plays a supporting role. And what I mean by that is if we go into the lower time frame, into the weekly, then here the first thing we would assume is that we might continue lower off of this weekly value gap. Doesn't mean we need to take any trades, right? Doesn't mean we need to be overall wrong in our analysis, because the weekly here plays a supporting role, where the weekly is already lower time frame for the monthly as well, of course. And what I mean by that is if we were to continue lower off of this weekly value gap and off of that weekly order block, we currently had two chances. Where the first chance was on this candle. Now that candle is, okay, we only expect a rejection. But the second candle, what happened? The second candle did not create an expansion phase. Was not even a bearish candle. So right there, I would argue, that is pretty suspicious to already continue lower. Where then the story becomes, well, if this is truly a breakaway gap, then right there, I think we might have already wanted to continue lower. So here at this moment in time, because of the dollar last week, I am quite 50-50 right now, because we also mentioned in the previous forecast, if we want to kill all the bullish arguments, then what should we do? We should come into this area right there, into that candle's high, because that prevents a bullish fair value gap from being created, which currently is not the case. So currently we do have a bullish fair value gap sitting right there, which all of a sudden creates a great bullish argument as well. So here I would want to be careful. In the beginning of the week, I really want to see, do we want to disrespect this weekly fair value gap? How do we go about that? Well, if we have that weekly fair value gap right there, how do we know if that weekly fair value gap wants to hold? By the lower time frame playing a supporting role. What is meant by that again? It's the same thing we are doing right here. We're reading the weekly fair value gaps to see if we want to trade into the monthly fair value gap. In the weekly fair value gap right there, we are now reading the 4-hour fair value gaps to see if we want to trade lower or higher. The only problem is, and that is why it is currently a little bit lower probability for me as well, is we don't have any 4-hour fair value gaps to deal with. So that is also indicating currently, which you can probably a pretty textbook example right there of seek and historic conditions. And seek and historic conditions, very easily summed up, is either when you have no fair value gaps being created at all, and it's also fair value gaps not being respected. So with fair value gaps not being respected, what I mean by that, we don't have fair value gaps being created, and those fair value gaps, they get respected by creating new fair value gaps of the previous fair value gaps, which in essence, essentially just creates, very simply said, a trend, which we do not get right there. So this is currently seek and destroy. Now, in the forecast for the mentorship, we mentioned, all right, during CPI, we can sweep one of these highs right there to then continue lower off of that. Hopefully, or potentially creating a 4-hour value gap lower to then continue lower, which it looked very promising when we looked at price action right there. But after that, it did not follow through, didn't create a 4-hour value gap, which is a bit of a shame, of course. But it is what it is. So right here, I am not too convinced on bearish prices. I am not too convinced on bullish prices. So my plan of action is I want to wait. Either we already get bullish 4-hour VWAP gaps higher. Perfect. I do potentially want to follow them. Unless we see a sweep right there, then I'll change my mind. Or if we come into this weekly VWAP gap right there, either we create new 4-hour VWAP gaps going over, so overtaking that weekly VWAP gap right there. That is an indication that we are disrespecting it. Or we are coming into it. I'm just stating all the possibilities to keep an open mind when we do come into the week. Or we come into it and we create an ST right there to then continue higher. Then of course, depending where the fair value gaps on the 4-hour are pointing towards, and what I mean with pointing towards, very simply said, a bearish fair value gap is pointing towards lower prices. Bullish fair value gaps are pointing towards bullish prices, so higher prices. And we of course also have manipulation fair value gaps, and this is something that was not touched on fully in the previous episode of Market Mastery, but we are going to touch on that as well. I already felt like there was so much information in the previous episode that I even wanted to re-upload it in a while, because I thought, well, maybe this is a little bit too much. But manipulation fair value gaps, and what they are is essentially they create STs. So for example, what we see right here is before we make a switch, before we continue lower or continue higher, what does the market want to do? Well, that all leads back to understanding how the market moves. And I don't want to go on a rant right here. Like I said, I don't want to waste your time this Sunday, but I do want to share this with you, because when the market moves, it needs to take liquidity, right? In order for us, well, not us, but again, the central banks, institutions, in order for them to get involved. That is the logic we use. In order for them to get involved, they need liquidity. Liquidity is being generated by momentum as well. So fair value gaps is also, you're playing with fire, as in you live and die by the fair value gap. And what I mean by that is, if you see this momentum and you do not see these higher time frame PD rays right there to the left, then you are going to get burned. Because you see momentum right there, we see manipulation. So because there's momentum in fair value gaps, that also allows them to use fair value gaps as manipulation. Again, like I mentioned, right, you don't even need to know fair value gaps to see that just this simple leg higher is momentum. You don't even need to know that that is a specific fair value gap to know that there's momentum in the market. So this momentum is being used as manipulation right there to create a bearish fair value gap, where you have a bullish and a bearish fair value gap, where the bullish fair value gaps act as manipulation fair value gaps. Something we'll touch on in different videos in the coming Market Mastery series as well, of course. And then that creates the higher probability fair value gap, which is a bearish fair value gap, which eventually we just simply said it did not follow through on, not creating new bearish fair value gaps. So here I want to wait for bullish or bearish fair value gaps, keeping an open mind here. Very much an open mind to see what we do want to do. Now, although with that being said, because we already know the dollar and we already have a great idea of what the dollar potentially wants to do, again, not super clear right now, that leads us to Forex, Australian dollar, US dollar, EU, GU, New Zealand dollar, US dollar. Yes, we still have the original IDs, but it's not super clear anymore, in my opinion, where that is, of course, always dependent on the dollar. If the dollar is clear, then Forex going to be very easily tradable. If the dollar is not clear, you might want to refer a little bit more to the crosses in the coming week before the dollar starts to clear up again. So you won't just sit on the sideline, you actually have something to do, which is trading the crosses, for example. Now, what you can also trade, and what is always quite nice, is ES overall and the indices in general, because on ES we see we are just continuing higher right now. Now I do want to see how we react above this high once we reach it right there. That is currently still my drawn liquidity until proven wrong. So what I mean by that is, if we start to disrespect bullish fair value gaps in the form of, if we now create a bearish fair value gap right there, that would be pretty suspicious in my eyes, and I would not like that. Then I might want to target lower. But what we're currently doing is generating this liquidity as well which could be very interesting. Now, let's actually say, and this is, again, this is purely me thinking out loud, right? So that is not me dealing with the facts as well, but it's purely thinking out loud and taking into account every possibility in the market. Where currently, if we are generating this liquidity and we are struggling to actually come above this high, if we are struggling to come above this high right there, then clearly we are somewhat struggling to also continue higher. If the dollar, like we saw, is struggling to continue lower and might want to continue higher right there, then of course, with the indices being correlated as well, the indices might want to actually continue lower for a bit. So if the dollar, of course, wants to reach for that monthly value gap, and what would that look like? Well, that is the perfect opportunity where we do have liquidity being generated right there for us to make a potential top in the market, where we could see something like this to then continue lower. Now, again, that does not need to happen. And the way we see that happening, right, is the same thing as what we mentioned on the manipulation fair value gaps on the dollar. Where on the dollar, we saw these manipulation fair value gaps. On ES, you would want to see the same thing. So let's say we create bullish fair value gaps right there. To see if it's a sweep, we will disrespect those bullish fair value gaps right there and continue lower. That again also leads back to the fair value story, right? If we want to continue higher, we should continue higher off of fair value gaps with those highs to continue higher off of that. So it's all connected with each other in a sort of web. It's quite funny. But anyway, that is mainly my expectation here for ES, where the main draw on liquidity still is these highs right there. Afterwards, mainly reacting to whatever we are seeing at that moment in time. Reading the fair value gaps. What story are they telling you? So if we take a look at NASDAQ as well, I have the same thought process where NASDAQ, I also want to see higher prices currently. No real reason for any bearish arguments other than the one we had on ES as well. But besides that, on the 4 hour and 1 hour to get a clear view as well, if we get fair value gaps higher right there, that is exactly what I would want to follow through on towards the highs. That is mainly what I'm looking at for the indices right there, which is quite interesting. YM. Now YM is still having this weekly fair value gap below it as well, where on ES and NASDAQ right there, I would want to more so focus on ES and NASDAQ because they just have that clear indication of what it actually potentially wants to do, where YM is just sitting here. It's just, well, very simply said, it's just sitting there. It's not doing a whole lot, where it's consolidating as well. We still have the weekly value gap, so we still have a reason to come a bit lower as well. So here I do not really want to trade or get involved in YM. If I was to get involved, it would be in NASDAQ or ES right there. Still bullish overall, but can we still sting into this to then continue higher? All things that we need to take into account in order to calculate our probabilities as well. On DAX, which was also quite interesting actually, we came back quite a lot, where we first off respected the fair value area, the fair value gap as well, to continue higher off of that. Then on the daily, I mentioned in the forecast for the mentorship, where on the daily, we never created a daily fair value gap, which was very suspicious to me, because that is the moment when I did not want to trade anymore. On Monday, we mentioned the 4 hour value gap right there, which was quite interesting and was a beautiful value gap. We continued higher off of that. After that, on that Tuesday right there, we did not create the daily value gap. So here I want to take a step back because I was not convinced anymore of bullish prices, since we simply said did not create a daily value gap higher. So here I also want to wait, either 4 hour value gaps higher or lower. In the meantime, I simply wait. So on Australian dollar, US dollar, let's see. Now, this was quite interesting, and especially since we waited, at least I waited for CPI on a Thursday to get involved in the main US dollar pairs right there, and I did not see anything interesting. That's the thing. Where here on Australian dollar, US dollar, the interesting thing I saw was a sweep of these lows. Now is also a good time to mention, potentially, in Market Mastery episode number 1. I ignore long wicks, and the reason I ignore long wicks is because long wicks right there are news wicks. And news wicks are not universally agreed upon, the same as wicks in general. And the reason why people use bodies instead of wicks sometimes is because wicks differ, they are different on every single broker. So you're not sure if you're looking at the exact price action as it's displayed right there. Where ES, NASDAQ, YM, since they are on CME, that is the official price action right there, then you can be pretty sure, all right, that is actually the swing high, that is actually the swing low. Where on Forex, the brokers are simply different. So that is when I tend to ignore long wicks as that right there, where for me, this is just a simple sweep of those lows to then have a 4-hour ST right there to potentially continue higher. Now, this 4-hour value gap, as you may notice, never created a new 4-hour value gap higher off of that, and even disrespected it after that. So here, again, for me, that's quite 50-50 at this moment in time. I would need, again, new clear bullish signs to continue higher off of that, where we're still in the same area right there. I do not like this formation, and I have seen this formation over and over and over, and it's not a great formation. And what I mean by that is on the weekly time frame, if we take a quick look at this, then we have this weird formation. I'm not sure if just experience or if you can actually logically see this as well, but can you see how this candle, so the previous week, and I mean the 1st of January week right there, is just an expansion phase. Then the second candle right there is this weird candle that did not expand higher, that did not create bullish prices, that did not come below the previous week low sitting right there. That is very odd price action to me. And the first thing that I would want to argue for is that we are about to take this previous week low, or that swing low actually at the time, that swing low that is being created right there. And the reason for that is because this is just simply not how the market makes a bottom in the overall market. It's the same example and quite similar to what we see right here with this situation right there. It's just not how the market tops or makes a bottom in the market. If the market did make a bottom, it would have already been a bullish candle right there, or like we see here, for example, it would sweep the previous week low to then continue higher off of that. Where this formation is just not great. It's not great for bullish signs right there. So if we do come into that weekly value gap, again, same story. Let's read the lower time frame. Let's read the 4-hour right there to see if we do actually want to continue higher or continue lower. Where I do not like this formation, which this formation could of course be also interesting if we do come below it first, that it could be a sweep to then continue higher. So that could be quite interesting overall, depending on what the dollar wants to do as well, sitting right there. All right, on EU, let's see. On EU, and nothing much has changed on EU, to be honest. We see the same type of formation that we had on Australian dollar, US dollar, but on EU, it's just really been a tough time right there over the past few weeks actually. So I do not really want to do anything, and like I mentioned like I mentioned last week in the previous forecast, this is just waiting, as in it's waiting for value gaps higher, for value gaps lower. It's just not super clear right now what it wants to do. So I do not want to get involved in EU as well. Simply want to stay on the sidelines right here. And we see again, beautiful seek and destroy conditions. So if you're a seek and destroy condition trader, then you probably had an absolute phenomenal time previous week. But for me, it's mainly waiting. GU, it's quite similar, and GU, we have this monthly value that's actually sitting right there. Weekly just struggling overall. We also have this swing high sitting right there, and we can see we are just simply not creating any bullish value gaps. So here, what I would see is potentially again a sweep of this high to then continue lower right there. So I'm not too convinced on either bearish prices or bullish prices right here. So it's a bit of a shame that this is also for me mainly waiting, and we can see that lack of momentum going high, right? Even though we have fair value gaps, the retracement consistently is very large right there. very large retracements, which is not that interesting for that bullish momentum. So keep that in mind as well. New Zealand dollar, US dollar. We see the same thing. Beautiful seek and destroy conditions actually. Now, right here, what I would want to see is I still want to see the bullish price action, but we do have that same formation right there. I'm just not super convinced on bullish or bearish price action. So I need a little bit more signs, and those signs are again in the form of 4-hour fair value gaps higher, 4-hour fair value gaps lower. Also seeing what we want to do with this weekly fair value gap sitting right there, very important. And then see where the 4-hour fair value gaps are pointing towards as well. Then on USD Canadian dollar. Now, right here, we had quite an interesting price action as well. We mentioned the weekly fair value gap last week right there, which could be quite interesting with the lows as well to continue lower from. Now, on the 4-hour, at the beginning of the week, we had this fair value gap lower on the 4-hour. I mentioned in the mentorship that this is not necessarily a move that I want to get involved in lower. If I want to get involved, then I want to wait for this sweep of liquidity right there to then continue lower. Why? Or, well, I did not know, but why did I understand the probabilities that that sweep is very likely to happen to then continue lower? Because I understand time, because I understand that CPI was still around the corner. And when CPI is still around the corner, then the first fair value gap right there simply does not have time agreeing. So does not have the volatility in the market just yet. Where that real ST that is getting created right there does have CPI agreeing. Where afterwards we see that this ST right there just simply does not want to follow through. So here I would make the same argument on a lot of different pairs as well, that we might actually want to continue higher right there for our fair value gap, to continue higher off of that, targeting those highs, aligned with potentially dollar as well, potentially continuing higher again. So here, mainly for Forex as well, what we are seeing is a lot of well, shitty price action. It's not necessarily shitty price action, it's just understanding what you need to do at that moment in time. And for me, what I know I need to do is for the majors right there, for US dollar pairs, I just know, all right, I need to take a small step back and potentially get involved in different pairs which don't directly have anything to do with the US dollar. So US dollar CHF, nothing has changed, still waiting for that weekly fair value gap right there. So still the exact same as we mentioned in the previous forecast as well. US dollar JPY, let's see. This was also quite interesting, and we swept currently the previous week high, or we did that last week actually, which was also a swing high on the daily time frame right there. Now, if we can disrespect this daily fair value gap right there, we could actually continue lower. But what we also saw with the dollar consolidating, so the dollar was not even going higher. US dollar JPY went higher. What that indicates to me is, of course, well, that indicates that JPY is very weak compared to the dollar, so even weaker than the dollar currently. Which means to me that I'm not too convinced on lower prices as well here. So I want to sit out a little bit. Where on all these pairs right there, you can probably tell that when the dollar is unclear, it's just, well, it's just not that smart to get involved. We can get involved, don't get me wrong. I can sit here for the next 2 hours and I can tell you a trade ID that might play out, might not play out. And I can force an ID, don't get me wrong. Everyone can force a trade ID in the market. Why do I not want to do that? Well, I don't want to do that because first of all, I don't want to give false expectation, and simply said, for my own benefit, I don't want to lose money. And when I want to make money instead of lose money, I want the best trading conditions to actually trade in, which makes it the easiest for me to make money. So very simply said, that's also what goes through my mind in low probability conditions, that yes, I can get to an ID. I can 100% guarantee you, I can get to a trade ID right there if I force a trade ID. I don't want to force a trade ID because then I know I'm just simply trading in low probability conditions, and low probability condition meaning there are higher odds that I am going to lose money instead of make money, which of course I do not want to have that. So if we do look at silver and gold, which this is what we talked about actually on the forecast, which is quite interesting. we mentioned right here that if we do want to continue higher here on the weekly, and we saw no weekly fair value being created and the dollar potentially being bearish, which of course we are coming back to say, well, is that really true? Is the dollar right now bearish? We would have to keep an open mind. We would have to see what we do with the weekly fair value gap. Anyway, on silver, we mentioned if we do want to continue higher right there, then price will seek a discount array. The only discount array that we have is the weekly swing low that we had right there. So here, once we swept that eventually later on in the week, on the 4 hour, we had a beautiful 4 hour ST, which is exactly silver delivering towards our demands. And this is also what you can see, right? To me, at least, I almost want to speak Dutch right there. At least I hope you can see this. And what I hope you can see is because at this moment in time, you have this very simply said and just plainly said shitty price action where you do not necessarily want to get involved. Again, unless you're a seek and destroy condition trader, I do not want to get involved in that price action simply because there's just not an easy trend to follow. Very simply said. So at that moment in time, low probability conditions, you can see how shit low probability conditions are. High probability condition, they happen very fast. Boom, instantly. Where right there, you have the weekly swing low. You have this 4 hour ST right there. At that moment in time, you've probably, if you only trade silver, for example, you've been waiting for quite a while for high probability condition price action. That is the time when you capitalize on that move. So you wait, and then you attack. And again, that attacking, eventually you're going to get to a point in your experience as well, in your trading, where when you get involved in a market, you know it is high probability condition. So you are going to use quite a lot of risk on that particular day to capitalize on those moves. And that allows you as well for the next coming weeks, even though we have low probability conditions, you can stay on the sidelines because you do not feel the urge to get involved anymore. Where here, you might have felt the urge right there and you might have lost money. And then you miss the actual high probability move right there. That's a pain in the ass. And that's just an endless cycle where the cycle is broken by simply waiting, high probability conditions, boom, get involved. Make sure, whatever it takes, even if the entry pattern is not that clean, get involved. The higher time frame always does the hard work. We mentioned in the mentorship, the higher time frame is the hard work. Meaning the patience you have to gather, the patience for that high probability conditions to set up, that is the hard work. Where the entry pattern is everywhere. So the entry pattern, just get involved if you know it's high probability condition on the higher time frame. Of course, also takes a little bit of experience, etc. But you'll get used to that. I trust you in that. Now, this is again very clean price action. I do really like that a lot. Now, can we actually continue higher right here? That is the question. Because if the dollar wants to continue higher, then simply said, silver will sweep these highs and continue lower again right there. So I'm not too convinced on that as well. And we also did not create an expansion fade on the daily. We can see huge wick on the daily right there. So we had very short high probability conditions right there, very short time period. If we did not capitalize on that, then simply said, we just have to wait right here again. And that is the same for the for gold, where we also had this swing low right there. Also, the only discount array at that moment in time, which we can look to continue higher off of. 4 hour, we also had 4 hour nice ST, which silver only had the clean 4 hour setup right there, which of course, in a 4 hour PD ray, you would go into the 5 minute, into the 15 minute to capitalize on that as well. Then right there, on gold, did not have the cleanest setup, but if we do want to continue higher, then it's the same thought process as in silver, where gold overall is a little bit stronger as well. But if we do want to continue higher, I would want to see fair value gaps higher right now being created in the new week, and then potentially following through on those as well. But if the dollar wants to continue higher, then I do not want to take any longs here on gold or silver. All right, Bitcoin, very interesting price action as well. And Bitcoin, it's just beautiful price action, isn't it? Because we mentioned this high right there, that swing high, that is the first drawn liquidity right there. Very simply said, This is the first premium array that we encounter. So a swing high right there. Then after that, on the daily time frame, how can we deliver towards that? Well, we have this daily fair value gap, which we can continue higher from. After that, we see that we continue higher and we sweep these highs. Sweeping in the form of we are wicking those highs right there. A huge wick, absolute beautiful price action, because we do not follow through, we do not create that new daily fair value gap higher. And again, it might be a misunderstanding as well that I see quite often is that I'm waiting for those new daily fair value gaps higher to be created. I do not need daily fair value gaps higher, or I do not need fair value gaps in my favor to be created. What I mean by that, if price action here wanted to continue higher, then it would have created a new daily fair value gap, and that sweep wouldn't have happened. So if that doesn't happen and we do not create that new daily fair value gap higher, then what is price action likely going to do? It's going down. So there's always the other option where if this doesn't happen, if there's not a new fair value gap being created, if the fair value gap does not get respected, then what are we likely doing? We're doing the opposite. So I switch. So at that moment in time, once we saw this sweep right there in the mentorship as well, we mentioned, all right, your eyes should now go to find fair value gaps on the 4 hour right there, and potentially even on the 1 hour, to continue lower right there. And what are you targeting? Well, very simply said, you are targeting weekly fair value gap that we still have right there, and potentially monthly fair value gaps that we had, and monthly fair value gaps that are also in the making right there. Can you see fair value gap in the making? Very interesting. Which eventually on Bitcoin, I'm still bullish right here. I'm still expecting overall longer term a little bit of higher price as well, but short term right there, this is just a very simple retracement to continue lower, to target lower right there. So that is exactly how I would go about that and my thought process. So right here, what is the fair value gap that can deliver us lower? That is currently this daily fair value gap right there, which is quite interesting price action overall. Quite nice. Crude oil. So crude oil was the opposite of nice, I do have to be honest, if we talk about last week. And the reason being for that is on the weekly right here, we had, still the weekly value gap, which in the previous forecast we mentioned, I mentioned I do not expect that weekly fair value gap to be respected, indicating that we might want to trade into the monthly fair value gap sitting right there. Now, on the daily, we also had nice signs. And this is again what I mean with on the textbook, on the if we only stick to the mechanical part, yes, this is a breakaway gap on the monthly time frame. If we now use the lower time frame, so every time frame below the monthly as a supporting role, where on the weekly right there, we have this weekly value gap, that is now indicating, and that weekly value gap is clearly not showing signs that it actually wants to push lower. That is indicating and telling us, all right, well, we might still want to trade into the breakaway gap right there. So that's very important. It's a mindset shift. And if you have that mindset shift, you're already ahead of a lot of your competition, because a lot of the competition thinks when we try to teach concept is like, all right, but then it should work 100% of the time, right? And no, and it's also very important why I mentioned in the first video of Market Mastery, everything that we do is probabilities. So we're also going to be very wrong. I'm also going to lose a lot of money, but I'm also going to make a lot of money. So it evens it out. And I hope it does not even it out. I hope I make more money than I lose money. So here on the daily time frame, we can also see, again, in order for us to see, will this weekly fair value gap hold right there? Well, this daily fair value gap tells us a great story, because that daily value gap is not creating a new daily value gap lower off of that. So at that moment in time, I mentioned, all right, I do think we want to continue higher right there towards this monthly value gap. And I still think that, but the overall delivery has been absolutely disgusting right there and has not been nice. So here, when I take that step back and when I see price action is very ugly like this, where it's just, you can't really make anything off of it, I just simply wait for a daily fair value gap higher or lower. And then I move on to another pair and I trade that one, because I do not want to get involved here in forcing my ID on the market right there. Very important. So I do still think we can deliver into the monthly fair value gap, but I need that clear sign to do that. All right, on Nifty. Nifty, I mentioned that overall we can as well continue higher. Throughout the week, we had lower prices right there. And we're seeing the exact same thing where the only discount rate at that moment in time, we did not create a daily fair value gap higher. And we just swept these lows to then continue higher off of that. Now, eventually here on Nifty, it's the same story that I've been doing on the previous weeks as well. Is I do not necessarily want to get involved here. Reason being is because I feel like I'm either chasing price or I'm trying to call a top in the market right now, which is those two things are very dangerous. You don't want to chase price and you don't want to call tops and bottoms in the market. So right here, I do simply don't really want to get involved. All right, that is the current forecast where the main interesting thing is going to happen on the crosses as well. Hopefully, of course. So if you do have any crosses that you would want me to go over, then please, please, please do mention it. It's just me or Mike audio is not as clear as before as he started a new series. I do think you're right, IMR, and I ordered actually a microphone in December, but it still has not arrived. So I'm using not the microphone that I used in the past. I'm using sort of a, what is it? I can't call it shitty. It does its job, but it's just not the best. Let's put it that way. So a better microphone is on the way. So you'll hear my voice super smooth and crispy in the future as well. Do you ever use IFVG? And I believe that's inversion fair value gap. And don't get me wrong, when I make fun of these concepts, I do not make fun of them as in I'm just judging people and I'm sort of making fun of your whole opinion. No, but when I see people use inversion fair value gaps, I always feel like, wow, you don't really understand it. I feel like it's just the way I see inversion fair value gap. And again, I have tested this myself. I have experience with it. I have traded it as well. So don't get me wrong. And inversion fair value gaps could be very interesting, but inversion fair value gaps always, in a magical way, they get respected when you simply have something to the right of it. And what I mean by that is you have, for example, on Nifty, not the greatest example because Nifty has a lot of gaps, but you have, for example, this then becomes an inverse fair value gap once we close above it right there. Now, on the daily time frame, you would say, all right, well, we are respecting the inversion fair value gap. What I would see is, well, we are simply respecting this daily fair value gap right there. So for me to have a lot of a way better accuracy, I would use the daily fair value gap right there, which a lot of people using inversion fair value gaps do the exact same thing. So then my question becomes, why are you even paying attention to the left? Because this daily fair value gap already indicates that we are disrespecting the weekly fair value gap. So the inversion fair value gap then is more so a reason to use it for disrespect, to see which side of the market are we not respecting. So are we respecting bullish fair value gaps or bearish fair value gaps? Well, that is also easily seen by looking at the most recent price action and looking and reading the most recent fair value gaps. So the whole inversion fair value gap for me is irrelevant. And it then becomes, all right, you can use as a PD rate as well or as a potential entry. And then my mind goes, well, if we want to have great accuracy in the market, then having that fair value gap, having a weird PD rate that is not that relevant, then that only is going to mess up our accuracy, and we are going to always have a reason to get involved in the market because we have inversion fair value gaps everywhere. So it's also not something I would want. So simply to answer your question, no, I do not use inversion fair value gaps because that's the whole reasoning behind it. How to know it's a bullish or bearish fair value gap, my friend? That is, I hope said perfectly. A to Z guide will help you with that. A to Z guide will help you with that for sure. Korea. Wait, are you from Korea or are you mentioning the chart? I blew my account last week. Damn, that is a shame, of course. But that is a great learning experience, no? Certified gamer. I think that's a very positive experience. I think we all blew accounts before we even got any close to becoming profitable or any payouts or any sort. So the only way you can turn it into positive is, of course, if you actually turn it into positive by learning from it. So that's very important. Learn from it, and the main thing I would how do I approach this properly? How I would expect you to learn from it is seeing that week and understanding that that week was just simply not a week you would want to get involved in, and that patience right there rewards you more than trying to get involved and trying to force an ID. So the first, and I'll tell you my experience because I've been in that place as well, where after I blew an account, after I had a bad week, my first response would be, oh, no, this can't be a bad week. This is just me. I don't know enough. I can't trade. I need to know more about the market. And to an extent that is true. And the thing you need to know more, and the thing I needed to know more at that time, was that the market is low probability at that moment in time. And it just is low probability for my strategy. So for someone else's strategy, might do perfect. That's also why social media is dangerous, because someone else might make profit. And you don't know that because you can't see their bank account or anything. So don't trust those people. But with that being said as well, the solution is not necessarily learning more. It's learning to stay out of the market. It's learning to be patient at that moment in time, where it's not a new concept that's going to help you. That's very important to understand. So it's oftentimes the opposite. Very funny how that works actually in the market. But again, it's a positive thing because you need to learn that in order to become profitable, where we also mention always the path to profitability is a process. It's a path. So every time the process happens, there's going to be things that need to be filtered out in order for you to become profitable. That's why the market works in a funny way where it just punishes you for every small mistake you make. And eventually, when those mistakes are filtered out and you learn from them, that is when you reach profitability. That is the whole story to profitability. That's very funny. Let me see. Does the fair value gaps always work, or what is the probability of this strategy? The fair value gaps, well, they don't always work. Well, let me actually say that. And what I mean by that is the fair value gaps always work, as in they always tell you exactly what we want to do, but it is you who has to make them work, if that makes sense. And again, it's very important to understand when we have a simple fair value gap in the form we just have fair value gap higher. It's not just, all right, we just have fair value gap higher, so I'm expecting higher prices, right? There's thought process going on behind it. So to tell you my win rate, and I mainly use fair value gaps in my strategy, it was in 2023, it was, if I'm not mistaken, 82% win rate overall throughout the whole year. Made around a 40% return. So that is how good the strategy can work, and potentially even better, because I do not think that I'm at my peak yet. I think I can still do better for sure. So yeah, that's mainly it. That's mainly it. So your question is very open. It's a very open question. Why do you teach people trading? Oof. Well, first of all, it's I like to teach people trading. Next to that, of course, it's also a side income. So why would I not go for it is my main question, if people are interested in hearing what I have to say. So next to my trading, it also relieves some of my trading because it is another income as well. Next to that, I really enjoy it. If I didn't enjoy it, believe me, I would not wake up at 8 a.m. on a Sunday to try to get everyone to follow a Sunday weekly forecast. If I, to sketch you that idea, I would not be doing that if I was not interested in that. So next to that, I also really enjoy it. And yeah, I sort of rolled into it where, first of all, I was always helping people in a Discord, in a Spectre Discord where a lot of people were active. I always liked helping people. Maybe because I'm also quite stubborn, so I always think not necessarily my way is the best way, but I just think I always have an opinion about something, you know? And that rolled into social media, where I shared my opinion on Twitter eventually, and then eventually YouTube, where eventually people also wanted more. So I was like, all right, why not? And it all started with, when I am trading, I don't spend a lot of time trading. As in, I set alerts and I wait for those alerts to go off, and I know exactly what I need to do in my trading. So next to that, I have a lot of time to do something else as well, which is perfect. When I can teach about trading, I also learn more about it again. I learn more about the overall experience, and then goes hand in hand perfectly. That's what I think. I've also seen you in Dr. Fuse's Discord. Exactly, Liam. And that is also where I was not super active. Wasn't my main Discord, but I was scrolling around that quite a lot in Dr. Fuse's Discord. Good times. Good times. Is trading your main business? If you say the niche, yes, 100%. 100%. Yes, for sure. For sure. I've always wanted to get into watches as well. I really like watches, but maybe something in the future. Currently it's just trading. What was feeling like when you got your first payment from a funded account? Well, the way I always see success, and it's very dangerous, right? Success, because my first reaction is I want more. I want more. Is this only 2K? I want more. I want more. I need more. When's the next payment? When's the next payout? How can I get that bigger account? And that is a very dangerous thought, of course. Of course, it's also good because if you want more, you likely also achieve more. But it's also important to be grateful. So when I did see it, of course, it's a crazy realization when you actually look back at what you've all gone through, then to finally pay out. That's crazy. So if you are being grateful then, and you look back at your journey, then of course, it's only an amazing feeling. It's an amazing feeling. And even if you did not get that payout just yet, it's still an amazing feeling to see how far you've come. Where it's crazy, the way I always see it is there's so many things that need to go right for you to be in the position you are currently in. Where imagine if you went into a completely different strategy and you were following signals, for example, still. So there's always a reason to be grateful for the position you are currently in. So yeah, that's mainly it. Hey, Arjo, just curious, are you considering to master, seek, and destroy market conditions? Yes, I can certainly, and I have traded them in the past. Don't get me wrong, I have traded seek and destroy conditions in the past as well. Am I a master of them? I would argue, well, a master, not necessarily. I just overall prefer trending conditions. And the reason for that is because seek and destroy conditions requires a little bit more focus, a little bit more time as well, way more attention, way more energy. So for me, to trade trending conditions is just very easily. It's very easy. For the same amount of effort, the outcome is just more. So I make more profit with the same amount of effort in just trending conditions. So then the whole idea of focusing on seek and destroy conditions doesn't really make a lot of sense to me. Then you could make the argument, why not trade both? And the reason I do not trade both is because then it becomes a very thin line between always trying to get involved in the market, which again, then leads to you want to trade every single day, which will just make you exhausted, first of all. And second of all, it will not be beneficial because when you go into trending conditions, then you go to seek and destroy and trying to trade both, you're going to mess them up and you're going to confuse them with each other, at least from my experience. So I do not want to do that as well. That makes sense. Hi, Arjo, this week I traded before the CPI on Thursday. Should I be waiting for Thursday? Yes. Well, it depends, of course. Depends on what the situation was. Depends. If it was one of these Forex pairs right there, I would have highly advised you to wait for Thursday to get involved. If it was Indices, I can see the argument why you got involved before. And yeah, that is mainly it. So I would always advise US dollar pairs for Forex. Yes, try to wait for the Thursday. Yes, for sure. Of course, with CPI on Thursday, very specific conditions as well, but now that's being honest. Thank you. I'm an honest man. I try to be. Sorry I'm late, love you always, Perk. No worries at all, no worries. Better late than never, right? Better late than never. What do you think of GBP JPY? I think quite a lot, if I'm not mistaken, about GBP JPY, because it's looking quite interesting actually. Where on the weekly time frame we have this weekly Verweij gap sitting right there. Now we also have the weekly bullish fair value gap, which is currently, again, like we know, that's a breakaway gap. So do we want to trade back into it? Well, I would almost expect higher price right there, but we are in a weekly fair value gap, which is simply said a premium array. So do we want to take longs, which is discount, inside the premium? You can already see how they collapse, right? They collapse into each other right there. It's not necessarily where you would want to get involved. So here, you want to wait a little bit for either 4 hour fair value gaps higher, 4 hour fair value gaps lower, to then potentially get involved. Because that as well shows the intention of this daily fair value gap or the weekly fair value gap lower right there. So if the weekly fair value gap, which could be very interesting, gets disrespected and we see again bullish prices right there, then the next target is super clear where we can capitalize it on it quite easily if the opportunity is there, of course, where we have that last no resistance run. So that is very interesting. Very interesting. Can you give some advice on trade management? For sure. Trade management and risk management in general is very, very interesting. And the reason I state that is because it's also experimenting. When you start trading and when you start getting into a funded account, you will first likely, or what I at least did, is you will get into trade and you will potentially move your stop loss very fast. Where over time, I actually have done the opposite. If I move my stop loss quite fast, and if I start to use a trailing stop loss, then from my data, I take more break evens than I take profits. Where the break even for me, usually when I take a break even, ends up being a take profit. So a missed winner instead of an avoided loss. So that is where you need to gather data on. Where for me, but your strategy might be a little bit different. For me, a break even is not worth it. So I either go break even when I know there's absolutely zero chance for it to return and I only avoid the loss, but I do not want to miss out on a winner. So that is when I go break even. It's being patient. Next to that, trade management is very important to set alerts. Set alerts for your risk management. When you are in a trade and you're going to watch paint dry, as in you're going to stare at your chart the whole time, the error of you messing up is going to increase a lot. Where someone that doesn't look at the chart is less likely to mess up, right? Because you're not even close to your chart. Someone that is constantly staring at the chart, the chance of you messing up, micromanaging your stop loss, micromanaging your take profit without or almost forgetting the original idea of why you even placed that trade. It's going to happen. So set alerts, walk away when those alerts go off, see if you need to go break even. And that is also understanding fair value gaps, because fair value gaps tell you when you can also go break even. So that is mainly it. That's mainly it. Do you hold for more than a week or so, or are you a day trader? And Hope already said perfectly, the says are most like day trade or scalp. I am also moving a little bit more towards the swing trading side. And the reason for that is mainly because I am currently in Colombia, as you may know. And I simply can't trade London. And London was my favorite session to trade. Where right now, when I wake up, it's already quite late for Forex. So I only have the New York session, which if you only have the New York session to trade, then I would not advise to focus on Forex unless you are trading 1 hour and above. So entries on the 1 hour and above, which could be very interesting. So the indices are mainly interesting for me, where I would still day trade and scalp. But Forex for me is also mainly swing trading currently. A little bit longer, holding a little bit longer. Arjo, what is exactly inside your essential course? You have enrollment. We have 6 enrollments. So there are 6 enrollments, 6 essentially different months where we go over material as well, which again, I need you to understand enrollments right there. I want to make it very clear. Whenever I teach something, I never want people to have a shiny object syndrome, where every concept that I teach is either the same concept that we already taught, or it's just more so diving into it, shining a different light on it as well. So all the enrollments right there, yes, they have different insights because the market conditions are simply different. And they also have different insights because we might dive a little bit deeper into it. So there's 6 enrollments as well, where 2 enrollments are on the website, 4 enrollments are on the old website. Then we have, recent forecast, recent breakdowns, old forecast, old breakdowns. Next to that, we also are currently working on a fair value gap enrollment, which is very interesting, where we go over an enrollment just purely focusing on fair value gaps, full fair value gap lecture to get you to understand how we view fair value gaps. And next to that, we also have spring enrollment coming up. Next to that, what do we have as well? We have deep work sessions. There's quite a lot of, there's a lot of material actually inside the mentorship, which is quite insane. So, but to get the full idea of what you can expect, I would highly advise to send an email as well, where we just go over what you can expect for every package. info@arjo.io right there, and you can send an email and we go over it fully. Where can I track my data the best? That's a great question. And what you can do, what I used to do, is use Notion, where I just simply track my data and I go over every trade I took in a week, for example. Nowadays, of course, you also have a lot of useful tools like TradeZella or something like that, where you can incorporate it or link it to your account as well. One question to Arjo or someone: is it possible to forward CME market data from IBKR to TradingView? I don't like to pay twice. Ooh, that's a great question. That's a very interesting question. I'm not sure if that is possible. The thing, because you can use in the trading panel right there, you can link it to TradingView interactive brokers. I'm not sure if that is possible though. I'm not too sure. The main solution that comes to my mind is then you would have to get used to the future screen on interactive brokers, which might not be nice, but also looks nice. It looks quite cool, no? But yeah, I do not think that's possible. I'm not sure though. Maybe you can also create a ticket. You can create a ticket right here on for TradingView itself, and they usually answer quite fast. How to use your concepts in stock that have gaps? That's a great question. And what you would want to do is you want to turn on an indicator. And what I mean by that is no gaps candles right there. It's the same for Nifty and anything that has a lot of gaps. Because when you turn on this indicator, there's a no gaps candles. The gaps, well, simply disappear. You can also change the colors if you want to. And as you can see, they simply become fair value gaps right there. So the story is a little bit easier to understand as well, where you can now ignore the gaps right there. That's how I would go about it. So actually look at Tesla. What is it doing? Not respecting the daily fair value gap higher right there. Not did it create a new daily fair value gap higher off of that though? Let me actually check really quick. No, it did not. Very interesting. So then we continue lower right there, and eventually on the weekly, monthly. All right, interesting. Potentially reaching those lows. Nice. Very nice. On a weekly basis, how often do you trade? How long does it take for your setup to play out? It's a great question. And on a weekly basis, my personal strategy, again, I need you to understand, my personal strategy is my personal strategy for a reason, right? It's my personal preference. It's my personal conditions as well, where a trade a week is mainly currently my conditions. As in, if I usually have one good trade a week, but in the mentorship, we also go over this, where if you want to have one good trade a day, it's also possible. You would just approach it with different time frames. For example, I never, for my personal strategy, I don't go into the 1 minute time frame. I used to do that, but currently my preference has changed a little bit, where it also depends on if you're a filtering process trader or a flow trader. There's a lot going into that as well. So it really depends on your personal preference as well, where if you're a flow trader, you are likely going to have a few setups a day as well, which have also been in the past, where I focus on a few setups a day instead of a week. So yeah, how long does it play out, or how long does it take to play out? Usually that is around a few hours maximum, where I don't like to hold overnight. If we still have new support ID the next day, then I can hold overnight, but usually it's a few hours. So it's quite fast. Not too crazy. How much do you risk per trade? Great question, Florentina. And how much I risk per trade depends on the situation I'm currently in. For example, if I'm on drawdown, I'm not risking the same amount as when I started the account. So as a general rule of thumb, I use 1%. If I'm in drawdown, I drop back to 0 to 5% risk. I can also increase my risk to 2%, for example, when I'm already in profit and I have a buffer created. General rule of thumb, 1%. Arjo, do you take trades on your phone or your computer? Always on my computer, and I have done that a long time. I always got used to the computer, and the reason what I always think is I don't know. If I want to manage a lot of capital, I'm not going to be trading from my phone, right? So I want to take a little bit more serious and actually sit down. And of course, I can also understand, don't get me wrong, I'm in a position that I can trade from a computer as well. So if you're not in a position and you need to trade from your phone, then your phone is perfectly fine as well. But I had the option, right? So I had two options. I could trade from my phone and my computer. So if I can trade from my phone and my computer, then my option would always be computer. And because it also lot size calculating, etc., makes it a lot easier. And I use a tool for that. So lot size is very easy to calculate on the computer as well. Let me see. Bro, can you explain the most important time zone for me to trade Forex at our Belgium, the Netherlands local time? Simple and clear. Yes, I would say London. If you have the time, trade London, especially London, because I love, well, not because I love London, but there's a reason why I love London, because London, if there is a clear PD rate that price wants to trade into in that day, then likely London is going to do that to then New York to already continue lower. So to catch sort of the high or low of the day, to catch the majority of the move, London is going to be your go-to. And then New York as well, but London. If you're in Belgium, London. Go for London, 100%. Let me see, my friend. Let me see. Question about market maker model. The components of the market maker model is low risk sell / buy. First accumulation and second accumulation, but sometimes I don't find the low risk buy / sell. Doesn't appear in the chart, so I do continue with 1 and 2 accumulation only. There's nothing wrong with that, and it's completely fine. The way I would approach that is I would sort of the ST for us and the ST for me is the low risk buy, low risk sell. And low risk sell / buy, of course, for everyone that is not familiar with market maker model, indicates that you risk lower. It's not low risk as in you take it and it's going to play out. No, you risk less. So it's very important because I messed that up actually when I first started learning about market maker model. But that for me is the ST. So that's the sharp turn. And then afterwards you have the first and second accumulation, which for me is just following through of fair value gaps, for example. So again, there's nothing wrong with not finding a low risk sell or buy if price already wants to continue lower. Do you teach your course as your YouTube market mastery course? Do you teach from basic to advanced? I do have to say that yes, inside the mentorship we also have a little bit basics, but it is already quite advanced. So if you do not fully understand the YouTube, well, you do not fully need to understand it. But if you have a good idea of what I teach on YouTube, then the mentorship will make a lot more sense. But if you have no idea what a fair value gap is in the first place, then I would always refer to the free YouTube stuff, the A to Z guide, etc. Do I teach it as on YouTube? No. And the reason I say no is because I teach it more step by step in the course, where the YouTube could still sometimes be a little bit all over the place. The course is truly step by step and is more clear as well. So just to give you a heads up on that as well. And if you want to again get that insight, then please feel free to send an email as well. Euro CHF New Zealand dollar JPY. Let's see. Euro CHF. Let's see. Monthly right there. This is monthly. So still creating that monthly value gap lower. Weekly. Yeah, this is quite interesting. And I wanted to trade this actually, but we came into that weekly value gap quite late. So here, what can still happen? We can potentially still sweep this actually to then continue lower off of that. But here, what I would want to do is I want to wait for the volatility, because I did not get involved last week because we had no volatility. We had no time supporting the idea anymore. So here, this is still very interesting. If we can get 4 hour value gaps lower already, or even sweep that high, with the right time. So I need news agreeing. Then that's still very interesting to continue lower off of. Then the other one was New Zealand dollar JPY. Let's see. Monthly. On the weekly, we are not following through on that weekly flag lower right there. So my thought process is targeting these next targets, not offering fair value, so seeking liquidity right there. On the daily time frame, daily fair value up to higher right there. That's quite interesting. If we can get 4 hour and 1 hour fair value up to higher right there currently with the right time again, could be very interesting to target higher. It's quite interesting. Tell us a way to avoid scammers. Oof. Well, first thing I would do is compare my content to people that flex their Lambos and their watches and stuff. Don't get me wrong, I love watches, but I'm not going to put it on my camera in your face and tell you, look at my watch. It's stupid. And the only reason why people would do that is because they can't convince you with the concepts they teach. For example, a great example is ICT, right? Have you ever seen ICT flexing with cars? Well, on Twitter, if you've been following, yes, we have. But when he came up, there was no flexing. There was just simple value. There was just simple knowledge that he shared. So there was not even a flexing of MT4 and 5 profits, which is also very dangerous. If you want to avoid scammers, again, I think you need to be very careful with the way they try to lure you in, because the way you lure in a majority of the people, which of course, one of my main the best performing video, which I would not necessarily call my best video. I always talk with my team as well. What we work on content is that video was great because I made money right there in off of those trades, and people saw that money and were like, oh my god, $13,000. And I would argue that how to create a trading plan on my channel is a way better video than that video. But again, how do you learn in the majority of the people is by sort of showing those profits, is by showing your watches, is by showing your cars, by showing your beautiful house. And that is where also the majority of the scamming happens, right? So there's also in that video, that was the last video where I actually went into depth on my profits. And the reason for that, and the reason why I don't do that, is because simply that attracts the wrong kind of audience. If I want my audience to succeed as well, I want everyone here to succeed. I want everyone here to become profitable. Do I do that by flexing my profits? Do I do that by flexing my watches, by flexing my cars? Or do I do that by sharing my knowledge, actually? I think it's done through sharing knowledge, and my profits won't help you in the long term. So again, how to avoid scammers? Well, avoid anything where people are simply not sharing knowledge or value or anything. That's very important, if that makes sense. And eventually over time, you'll notice the difference between a scammer and someone that's honest. 100%. How did you get so good at trading? Well, I don't consider myself very good, but of course, yes, I understand trading. I can confidently say that. But how did I get so good at it is by simply failing a lot, blowing a lot of accounts, studying a lot. And to sketch you the idea, at the moment I started trading, I came from e-commerce. I was still living at home. I had nothing else to do. I did not go out. I don't like partying, just to sketch you that idea as well. I don't like partying. I don't like drinking alcohol. I don't like doing all those stuff. So every single day from the morning to the evening, all I did was studying trading. And then eventually I applied that in a live chart. And when I applied it in a live chart, I had more time where eventually because when you're live trading, you don't want to spend 8 hours actually trading. No, you want to sort of manage your time very wisely. So yeah, that is eventually how I got better at trading. Let me see. Yes. Can we get PDFs about market mastering episode? Yes. I'm working on that as well. So no worries. I will share that with you as well. In the next video, there will be a link in the description where everything is shared. Is it possible to be consistently profitable only following your YouTube videos rather than enrolling into the mentorship? 100%. And the way I always describe that is that the mentorship is an extra. If you can afford it, then again, the mentorship will be an easier path to profitability. The YouTube will also be a path to profitability, where you would still have to sort of figure out things a little bit more on your own, where the mentorship you get guided a little bit more. But the YouTube, otherwise I wouldn't make these videos, otherwise I wouldn't make these series, believe me. They are also your path to profitability. If you do not want to enroll into the mentorship, that is perfectly fine. There are a lot of people as well that actually send emails to me that show their funded certificate by just learning the YouTube, not even coming close to the mentorship, which is, of course, absolutely perfect. Last question, bro. To the same question, do you use Meta 4 or Meta 5 on your computer? I use both because I have different accounts. But if I were to choose one, then I don't really have a preference. MetaTrader 5 is sort of a little bit upgraded version of the dinosaur version of MetaTrader 4. It's almost the complete same. Other than that, the mobile phone functions have changed, but again, I don't really use those. So it's very similar to each other. So if I were to go for one, I usually go for MetaTrader 4 because I like the old look. I'm used to it. And other than that, if I create a new account and I don't want it on my MetaTrader 4, then I go for MetaTrader 5. So I use both, actually. All right. Have you ever not taken trade in 1 week? Yes. For example, this week. I take, there are quite a lot of weeks actually where I do nothing because the market conditions are just also showing me nothing, if that makes sense. What advice would you give to increase the win rate of a trading plan? That's a great question. And this is a very misunderstood topic. The way you increase your win rate in a trading plan is, first of all, you learn through a mentor. You learn concepts and you apply those concepts in an almost mechanical manner. Then eventually your intuition, your experience will also have an input. The skill, the balance you need to have is 80% mechanical, 20% intuition experience. At the beginning, you're not going to have that experience. So what do you need to do? You need to build that experience. That can only be done by failing, by taking losing trades, because you learn from that, and that allows you to avoid those situations in the future. So increasing your win rate is not done through the typical thing that people think, where they go into a mentorship or they go into, again, the shiny object syndrome, where a lot of people tell them different things and they try to learn that new concept to improve their win rate. That's not how it works. It works through experience and intuition, where you avoid mistakes and losses you took in the past. So to avoid them, you need to take them first. So to increase your win rate, gather experience by losing trades and by winning trades. Overall, by just simply trading. That's how you increase your win rate and your return. What's up, Farid? What's up? How are you doing? Sir? How are you doing? Let me see. Do you prefer to take a trade during a specific time of day, or can you enter a trade during the whole day? Yes, I can. It depends on the time frame, Manny. If we are talking about 15 minutes and above, I can look to basically trade the whole day. And if we have news on that particular day, 5 minutes and below that, that's where you need to be a little bit more careful. Does the mentorship help with ES and NASDAQ? Yes, the mentorship definitely helps with ES and NASDAQ. And we go over a different approach than what you're seeing actually in a live stream as well for ES and NASDAQ, where we go more over a flow trading plan, which is a little bit different for ES and NASDAQ. So yes, for sure. A lot of futures traders in the mentorship as well. All right, I'm going to end it with that. I want to thank you all for being here, of course. And then next video, Tuesday, is about draw on liquidity as well. which is very interesting, a very easy approach to draw liquidity, the way we also use it in the mentorship actually. Next to that, we're also going over extra fair value gap videos and making everything as clear as possible. All right, perfect. I want to thank you all. I want to see you at the next one, of course. I'll see you at the next Sunday weekly forecast. Remember what we talked about. Sometimes patience is all it takes. Perfect. Thank you, everyone.